Hello and welcome to SabiScholar learning platform. I am Edis Brown Emmanuel, your accounting tutor. For as long as you will be viewing, as long as you will be following these accounting tutorials, I will be your guide, helping you to make the great grades you are looking for. So whichever examination you're preparing for, you made it to the right place because we are here to help you stand out. And I beg you, I implore you as your tutor to please take whatever it is we're going to teach you here seriously and of course do your homework. Yes, you have to do some reading, you have to do some studying on your own, but you are welcome to class and I assure you it is going to be a really amazing journey. So today, what is the topic at hand? Nature and significance of bookkeeping. That is the topic we're dealing with. Nature and significance of bookkeeping. It is very important to understand the concepts you are dealing with before you delve into other complicated matters. So what is bookkeeping? Bookkeeping is the systematic recording of transactions on a daily basis in the appropriate books. Now that sounds like a lot of English, but let's get to break it down. Bookkeeping is the recording of transactions on a daily basis in the appropriate books. Just like in your house, you have certain things that only stay in the toilet and you can't take them out of the toilet into your bedroom because ew. And you have certain things that stay in the bedroom, they cannot go into the kitchen or they cannot go elsewhere. That is because they are supposed to be where they are supposed to be. Remember that what happens in Rome gets to stay in Rome. That is what bookkeeping is all about. Recording these transactions where they are supposed to be. That is the appropriate books. What is accounting? Now, listen carefully because this is where it gets a little complicated and that is why I am here to guide you. Accounting is the process of identifying, classifying, measuring, analyzing, recording, interpreting, and communicating financial data of an organization to enable users make decisions. Sounds like a lot, but let me break it down a little. So accounting, first you need to know that it is a process of what? Identifying, classifying, measuring, analyzing, recording, interpreting, and communicating what? Financial data of what? An organization. Why? To enable users make informed decisions. So now it's simple. You know what accounting is all about. So when you sum all of these together, it provides us with what is called the accounting cycle. Now, the accounting cycle differs from author to author, like the number of activities involved in this cycle from stage 1 to the last stage for you to be able to complete all the transactions when you are dealing with accounting. But for the purpose of this very lesson, I am going to just be giving you 8. Number 1, identify transactions. So what transactions were carried out? Were they sales? Were they purchases? Are they going to be credited? Are they going to be debited? You have to identify those transactions. The second is record the transactions in a journal. Record transactions in a journal. Now the transactions should be recorded in the appropriate journal, such as sales journal, purchase journal. You have to do that. Number 3, posting. After recording the transactions in a journal, post them to the ledger, which provides to the general ledger, which provides a breakdown of all accounting activities by account. Number 4, post to the trial balance. Now, this is not an adjusted trial balance. This is an unadjusted trial balance. Just prepare it and post these activities to them. Number 5, analyze the entries. Now, you do this to identify necessary adjustments if there are any discrepancies. And are there any differences? While you're analyzing the entries, you're going to notice this. So number 6, prepare worksheets. While you're preparing worksheets, adjust the entries that need to be adjusted or corrected. Number 7, generate financial statements. This is the fun part. Prepare statements like the statement of profit or loss, the statement of financial position. You prepare all of them. Number 8, as the last, close the books. Now close the books for the period. Balance your account, and now you're ready to communicate, you're ready to interpret these transactions for people to make informed decisions. So this brings us to the next part of this class, branches of accounting. Now, I want you to see accounting, or let us get to see accounting as a tree. Now, this is a tree, and the root right here is accounting. Now, above or up here, we have 8 branches. Remember, today we are dealing with 8. So we have 8 branches that signify different parts or different forms of accounting. We have financial accounting, management accounting, cost accounting, auditing, tax accounting, forensic accounting, fiduciary accounting, government or public sector accounting. I know it sounds like a lot, but I'm going to take them one after the other and explain so you get to know. That is why I am here to guide you. I cannot say that enough. So number 1 is financial accounting. Financial accounting is the most popular form of accounting. I am sure once you heard accounting, the first thing that came to mind was financial accounting. Yes, it is a specific branch of accounting involving the process of recording, summarizing, and reporting the transactions resulting from business activities. One thing you should know is that financial accounting has to deal with transactions resulting from business activities. Now, they are summarized in the preparation of the financial statements. So, you know that financial statements are linked to financial accounting. Number 2, management accounting. From the name, management. Now, this is a branch of accounting that provides information to management for better administration of the business. Now, it helps them to make important decisions and control various activities. Now, they want to know which venture is giving them more profit, which venture is making them lose more. So they want to know where to invest. They want to know where to back out of. That is what management accounting deals with. Number 3, cost accounting. Now, cost accounting solely deals with evaluating the cost of a product or a service offered. Now, you're producing something. How much is it you spent in the production? Cost accounting helps you to arrive at that. It puts together all of the production, administrative, and other costs that contribute to the output of production. So you're going to know this, and then you know at the end, are you making a profit or are you losing? Number 4 is auditing. When it comes to auditing, there are 2 things we're looking out for. We want to inspect and we want to certify your account. So auditing has to deal with an entity's account being inspected and certified by an auditor who is contracted internally or externally to look at these things. So if there are any discrepancies in your accounts, EFCC, where are you? That means your account has to be in line with the accounting principles. It has to be in line with the accounting standards. It has to be in line with everything that the professional boards are saying it has to be in line with. This brings us to number 5, tax accounting. Now you need to know that tax accounting is the branch of accounting that deals with taxation. Do you remember what a tax is? Tax is a levy paid by citizens to the government, and there are different forms, all kinds of taxes which are treated differently. So taxation or tax accounting is that branch of accounting that deals with taxation. Now, number 6 is forensic accounting. This is also known as legal accounting. It is used to investigate 3 things or even more: bankruptcy, fraud, and mismanagement matters. Now, if the auditors or whoever is involved gets to find out that you are wanting, this branch of accounting gets to take over, and EFCC, over to you. Remember that. So we have number 7, fiduciary accounting. Fiduciary accounting. This is that branch of accounting that focuses on overseeing the disbursement of funds by legal custodians. Number 8, as the last, it is one interesting part of accounting that every citizen, yes, almost every citizen, including yourself, is interested in. Why are they so interested in this? That is because it has to deal with their government. They want to know how the government is dealing with their taxes. They want to know how the government is appropriating the funds to the state, to the federal, and to the local government areas. Now, this part of accounting has to simply do with keeping of financial records of or for and by the government. So whether it's at the federal, it's at the state, or at the local government level, this is why you hear certain percentages of the budget is for a particular state, and so on. So this part of accounting, or this branch of accounting, is that branch of accounting that deals with all of these preparations. Now let's talk about the history of accounting. It is very important to know the history of anything you are talking about. So for a moment, you're going to permit me to delve or to slowly leave the mood of teaching and go into a storytelling mood. That is because histories are best remembered when told as stories. So I'm just going to do like you hear in the bedtime stories, but not like that because I do not want you to sleep. So I'm just going to tell you the history of accounting in more of a storytelling mood. Tracing the history of accounting or the exact origin of accounting will be like trying to count the strands of hair on your head. Accounting has existed in various forms and levels of sophistication throughout human history. There is no accurate record of when keeping of accounts started, but many authors suggest that record keeping is as old as man. The spread of the use of Arabic numerals instead of the Roman numerals or numbers historically used in Europe increased efficiency of accounting procedures among Mediterranean merchants. The starting point of accounting can be linked to the merchants in the era of Babylonian and Assyrian civilization at about 4000 BC. They made simple marks on walls, stones, or wax tablets to keep records of their possessions. The double entry accounting system in use today was developed in medieval Europe, particularly in Venice. It was made popular by an Italian monk and mathematician, Luca Pacioli, who is regarded as the father of accounting. He gave valuable insight into the reasoning behind accounting records in his book Summa de Arithmetica Geometria Proportionali e Proportionalita, published in 1494. He postulated that all entries must have a double entry, one debit and the other a credit. Accounting began to transition into an organized profession in the 19th century. During the Industrial Revolution, the need for sophisticated accounting methods arose and different professional bodies were formed. The Institute of Chartered Accountants Scotland was established in 1854 and the Institute of Chartered Accountants England and Wales in 1880. The Institute of Chartered Accountants of Nigeria (ICAN) was established in 1965 and was affiliated with the Professional Institute in Britain and USA. Now, several professional bodies have sprung across the world to guide the accounting profession. Speaking about professional bodies, this is the next subheading, professional accounting bodies. So some professional accounting bodies guiding the profession include Institute of Chartered Accountants of Scotland, Institute of Cost and Management Accountants, Institute of Chartered Accountants of Nigeria, and Association of National Accountants of Nigeria. Now, these bodies all over the world are there to ensure that the industry professionals follow the laid down accounting principles, laid down accounting standards, or whatever it is that has been laid down. So if you want to be taken seriously in the profession, I would advise that you get to be licensed by the necessary or the relevant body in your region. The last but one thing we are going to talk about today is the benefit of bookkeeping and accounting. Now, the benefits of bookkeeping and accounting. Number one, it facilitates the comparison of accounts among firms. So MTN and Airtel can compare their account and know that this is where MTN is dealing better and we can do this, we can do that. Number two, it provides written records which are essential for proper conduct of business. Number three, it facilitates reference making to past transactions. Number four, it reveals the financial position of the business. Number five, it shows purchases and sales made within a given period. Number six, provides stakeholders with information for decision making. I did not get to explain all of those because they are self-explanatory. Yes, just go back. We're done with this particular lesson. But before we move to the next lesson, I would like you to take out some time to think about the definitions we taught today, the branches of accounting, the accounting cycle, the history of accounting, the professional accounting bodies, and of course the objectives of bookkeeping and accounting. If you can do that, you are ready for the next lesson.